Hello, hello, hello. Hi, everyone. This is Wheezy, as you all know, and let's begin today's webinar. So, as you can see on the topic right there on your screen, there's going to be three reasons why your losses are bigger than your winners. It's kind of very simple. Uh, the reason why majority of trader, I would say the 90% or the 91% of trader are not successful in the market are based on some reasons, because you cannot see that forex market is very easy to trade, or the like stock market is very easy to trade, but they still have approximately 90 to 95% of trader lose their money. So I will tell you, like, straight up, it is not easy. So that's the reason why I made a research. So I figure to like do this webinar today and tell you the true reason why your losses, for those guys that are losing, are bigger than your winners. And if this trend continue, if your losses are always bigger than your winners, be rest assured that in the long run you will blow your account. Definitely, your account will be wiped out, and you will be forced to top up your account and continue trading. But if you correct these three reasons, there are a lot of reasons, but I picked three reasons, and if you'll be able to correct these three reasons, your trading is going to change for the better in the nearest future. So without further ado, let's jump into the reasons why you lose money in the market and some other people wins money in the market. If you have any question, feel free to drop it at the right hand corner, and I will answer your question in as soon as possible. If you still want me to do some technical analysis for you, feel free to drop it there and I will do the technical analysis. So number one, the number one reasons, I will not put it, I will put it like this. The major reason is the psychology, your psychology when taking a trade. That is the major reason. But inside your psychology of taking a trade, there are three main reasons that is kind of messing up with your psychology, and from that messing up with your psychology, you are losing money. So let me take the so as I said, the general reason is the psychology behind your trading. So that is one of the biggest reasons why we usually lose our money in the market. So that being said, let me color the psychology. Then inside the psychology, we're going to have the three major reasons why you are losing money in the market. So this is the general psychology why we are losing money in the market. Number one, we usually don't have stop loss when we are trading. Just a second, I'm trying to type the stuff in. So I'll put it there, so that's so you can see it on your screen. And number one, so number one is no stop losses. A lot of trader, mostly the new guys, not only the new guys, there are still some old trader. When they take the trade, they usually don't have stop loss. They just think that I know what I'm doing, and definitely when I will take this trade, everything will work out in my favor very good. So that being said, I will not take I will not put stop loss. I will only put take profit or so I'm not taking stop loss. That is kind of a wrong mindset, because just imagine right now you are thinking that, oh, this currency pair is moving, this British pounds USD, it is moving to the upside, and you find some nice trading opportunity, and the trading opportunity is like, okay, yeah, you know what, the price broke structure at this it broke structure at this level. Let me put it there. I broke structure at that level. Then you say, oh yeah, the price already broke structure. Then this currency pair will continue moving to the highest, and you'll be targeting somewhere this region to take your profit. Right? So you'll be targeting this region to take your profit. So you take a position at this current price which we have right now. So what happened when the price broke structure? It comes back and you take the position. Then it starts. You are like in the profit, right? You are in the profit and you don't want to like move your stop. You don't even have stop loss beginning. But however, when the price starts moving in your favor, you don't even want to add your stop loss to break even to your entry point and allow the price to move directly to the level which you want the price to hit. You said, no, I don't want to do that. The price will definitely hit that. Then you don't have stop loss, and at the end of the day, what happened? The price reverse and continue moving downward, and at the end of the day, you blow your account away. That is number one reason. No stop losses. A lot of trader, not only you, if you are doing it, not only you, there's a lot of trader that is still doing that same mistake. They usually don't have stop losses. They just think that the market will continue moving in their favor forever. So with that, they said, no, I will not have my stop loss. I will just continue trading, and everything is going to be fine. So that is the what's it called, number one. And the number two, I'll take this label. The number two reason the number two is going to be fees risk. So this one is very important. This particular number two, fees risk, is very important. Why I said it's very important? It is because, number one, you are a trader, right? You have maybe $1,000 account. So you have this account and you think that, okay, you know what? Let me be trading in this account, and with every opportunity, you don't have one particular risk which you're taking. Today you can take some trade and use 1% risk. Tomorrow you use 5% risk. Next tomorrow you say, oh damn it, this is a perfect setup. Because this is a perfect setup, I want to use this risk, and you use 5% risk. So your risk percentage varies, which is very bad. If you want to be successful in forex market or in any market which you have trading, and I mean the financial market, maybe in the stock, maybe in the currency market, maybe commodities, futures, regardless anyone, you need to have fixed risk. I'll put it small letter there. Yes, you need to have fixed risk. If you have $1,000 account, you need to decide that, okay, I have $1,000 account. I will be using 2% risk in this $1,000 account regardless. That is, regardless, you will be using, whether the setup is kind of perfect, you will use 2% account. Whether it is on Monday, you use 2% with your risk. Whether it's Friday, you use 2% your risk. Why? Or maybe 1%. I'm not telling you maybe you start using 2%, 1%, 3%. No. You know your account balance. You know how much risk you can stand. When you know how much risk you can stand, fix your risk percentage at that particular point, regardless of the day of the week you are trading, or the particular risk which you want to take. Fix your risk. Because why? Okay, let me give you an example why you need to have fixed risk. For example, you see, okay, like this British pounds USD right now. You said, okay, wow, this is kind of a very good trade setup. It's kind of a breakout, and right now the price is coming to the retest, and it already forms support at this point in time. What will I do? I want to buy. Yesterday, maybe you used 2% risk or 3% risk, and you have a loss. Or maybe the previous trade you used 2% risk or 3% risk, you already had a loss. But now you said, okay, because I already have a loss, let me reduce my percentage. Instead of using 2%, then you use 1% or you use 0.5%. But at the end of the day, if you take that particular percentage, maybe 0.5% or 0.1%, the price goes in your favor. You are happy that you already have winning trade, but you forgot that what you used 2% yesterday, but today you are gaining 0.1%. Then it still comes back to what? No stop loss, or what's it called? At the end of the day, your winners is very little and your losses are very big, because you don't have fixed risk. You don't know at one particular trade, like, okay, from today henceforward, I will be taking 1% risk regardless of the trade I am in, or I will be taking 2% risk, whether it's on Monday or it's on Friday. This is my risk per trade, and that is it. So you need to have that particular fixed risk, and when you have that, you will see your trading will change for the better. Trust me, your trade will change for the better. So we already talked about no stop loss. We already talked about fixed risk. So finally, what we top this up is I'll take this label shot again about theory. Taking profits too early. You're taking your profit too early, the price start moving in your favor. You say, oh, the adrenaline start kicking in. Oh, this price is moving in my favor, it might reverse. And you're already in 3 pips profit or 4 pips profit. You already say, hey, you already start moving like, oh, you are in 2 pip profit or 3 pip profit. You want to take your profit very fast and everything. Boom. What will happen? You start thinking that because you want to take your profit very fast, at the end of the day, you are closing your trade when you are already 2 pips or 3 pips or 10 pips in profit. But when you're losing trade, when the price start moving against you, your stop loss might be okay, let me use this measurement. Okay, let me say you entered at this point, right? So the price moving in your favor 18 pips. You said, oh yeah, I'm already in money for 18 pips. I want to take my profit. You cut your profit, but initially your stop loss was 40 pips or your stop loss was 30 pips. So if you cannot go for 1-to-1 or 1-to-2 or 1-to-3, why do you even take the trade at all? Before you enter a trade, before you take a buy, I already did this webinar before. Before you take a buy, you need to plan where to, in as much that you are planning where to exit when you are losing, when you put your stop loss. You need to plan when to exit when the price is already going in your favor. So in case you are planning where to exit when the price starts going in your favor and you measured it, maybe I take this trade right now, right? So maybe I take the trade when the price was here. I will be targeting, okay, the price might reverse in 40 pips. At least, if I'm a 1-to-1 trader, my stop loss needs to be at least 40 pips as well. And if the price did not hit my take profit, there's no reason for me to start closing early to take the profit at 5 pips or 10 pips when my initial stop loss was 40 pips, and I know myself that when the price starts moving against me, I will not close it. So why should I even take it? So that is the reason why what you need to plan where to exit the trade when the trading start going in your favor. It is very important. You need to plan where to exit the trade when the trade start going in your favor, in as well that you need to plan when to exit the trade when the trade is going against you. You don't need to start moving your stop loss, or if you don't even move your take profit. And I still advise against this, extending your take profit. Extending take profit is very bad. It's still the same thing like extending your stop loss too, because if you plan to take profit initially at this level, why? Because the price is coming there, you said okay, the price is already coming there, agreed, okay, let me adjust it to here because the price is already moving in my favor, let me adjust it to here. But when do you know the time that the price will reverse? No. Initially, when you plan that the price is coming there, you knew the reason why. So why don't you leave it for the price to hit that target, and you know that okay, yeah, it already hits the target, you plan for the next trade. The same thing when you put your stop loss here, when you take this trade, you put your stop loss here. Why extending it? Oh, it's already coming closer, it wants to take me out, I want to extend it, or I want to extend it. It's the same thing like no stop loss. Just because you said, oh, they always advise you to put stop loss, you will put stop loss, but still extending the stop loss when the price almost want to hit you, is still kind of, you don't have stop loss as well. So in general, these are all psychology, and inside of psychology, there are three main reasons why your losses are bigger than your winners. The number one is no stop loss. Number two, no fees risk. You don't want to like take 1% today you take 1% risk, tomorrow 3% risk, 4% 5% risk, when you know in financial market or in the forex market there's always going to be losses. There's always going to be losses. So you don't know the day that the losses is coming. So you take 1% trade today, and you that is a winner for you. But tomorrow you will increase the risk to 5%, but tomorrow might be the loser for you. At the end of the day, you already in a drawdown. Then you start chasing that. Yeah, you want to chase your winners and everything. That is not how it is done. And the final one is taking profit too early or too late. So guys, that is what I wanted to discuss about today with you. Three reasons why you win or you lose your money. And I believe that this knowledge can be taken very seriously, and you will use it and increase your profitable trade in the future. It is very important. You need to increase your profitable trade in the future, because if you stop doing this mistake, your account will start growing exponentially. Trust me when I say that. When you start putting a stop loss, number one, and when you have fee streaks, number two, and stop taking your profits too early, number three, you will become profitable over time. So guys, thank you very much for the webinar. See you next week for new video or technical analysis or fundamental. Till then, remain blessed, and bye bye for now.